With the banking crisis in the United States revealing the inherent flaws in the financial systems of both America and Europe, evidence of de-dollarization is becoming increasingly apparent, as countries avoid using the US dollar in transactions. This process is being accelerated by the ASEAN countries in response to the impact of the Federal Reserve's irresponsible monetary policy. US allies are also becoming aware of the need to abandon the dollar, particularly given the expected US debt default, which is likely to further damage the dollar's credibility. The US dollar has long been a symbol of American dominance in the global financial order and a tool for advancing American interests at the expense of other nations. For 50 years, the US has been able to consume goods from around the world without being penalized, due to the ability to print a sheet of green paper that costs only about 17 cents for $100 U.S. notes. More than 110 countries, including U.S. allies, now have trade deficits with the United States. The trade deficit allows the U.S. to use the remaining foreign currency reserves of non-dollar countries to sustain its consumption beyond its own production capacity. However, the role of the dollar in global finance is now under threat. Several senior economists at the Federal Reserve have warned that the dollar cannot maintain its kingship in the long term, and have acknowledged that the dollar is in crisis. Harvard University economics professor Kenneth Rogoff has written a report explaining that the U.S. dollar, as a tool to limit other countries, has cast a shadow on the stability and reliability of the international monetary and financial system. This has raised questions about the dollar, and even U.S. allies are now beginning to launch a frontal counterattack on the dollar. For example, Brazil, a U.S. ally, has already begun to replace the U.S. dollar with the yuan in trade with China and settle transactions directly in its own currency. Switzerland, a neutral country, and Israel, another traditional U.S. ally, are also selling dollars for renminbi, with Switzerland joining the ranks of those abandoning the dollar in oil trading and international reserves. The European Central Bank, Switzerland, Japan, the United Kingdom, Sweden, and the Bank for International Settlements have formed a digital currency development group to bypass the centrality of the dollar. The SHTA trade facility being developed in Switzerland to help the Iranian central bank settle cross-border transactions has also carried out a number of international transactions that bypass dollar settlement. Switzerland has officially begun the process of building a yuan hub, replacing some of its dollar reserves with yuan by selling off dollars in the international reserve space. Israel has sold $17.7 billion of U.S. debt, liquidating 33% of its position in U.S. debt compared to its peak position of $69.1 billion in 2021. Israel is following Switzerland's lead in replacing the U.S. dollar with the yuan in its foreign reserves, replacing the drastically reduced dollar quota with the yuan to accelerate its adaptation. France, another U.S. ally, has signed a trade agreement allowing payment in yuan instead of dollars or euros, becoming the first Western European country to do so. The state-owned company Total, the world's second-largest LNG giant, was the first to carry the flag of de-dollarization, signing the first LNG purchase agreement with a Chinese state-owned oil company to pay in yuan, while the gas was imported from the United Arab Emirates. This new landscape in global energy markets and international reserve asset space now suggests that the role of the U.S. dollar is being weakened or shared, especially as landmarks of de-dollarization by several major Middle Eastern oil-producing countries, represented by Saudi Arabia, Iran and others, continue to emerge and be exploited. Following the rapprochement between Iran and Saudi Arabia in Beijing 2 weeks ago, the latest development is the digital yuan, as China seeks to increase its influence in the Middle East and expand the use of its currency in global trade. The de-dollarization trend is not limited to the Middle East and Asia, as African countries are also exploring alternatives to the dollar. For example, Nigeria, Africa's largest economy, has been exploring the possibility of settling trade with China in the yuan instead of the dollar. This move is seen as a way for Nigeria to reduce its reliance on the dollar and diversify its foreign exchange reserves. The de-dollarization trend is driven by several factors, including the increasing use of digital currencies, the growing influence of China and other emerging economies, and the erosion of trust in the stability of the U.S. financial system. The U.S. debt crisis and the Fed's monetary policies have raised concerns about the long-term value of the dollar, prompting many countries to seek alternative currencies. The shift away from the dollar is not without risks, as it could lead to increased volatility and uncertainty in the global financial system. The dollar has been the dominant currency in international trade and finance for decades, and its replacement could cause disruptions and instability. However, many countries believe that the benefits of de-dollarization, such as greater financial independence and reduced exposure to U.S. economic policies, outweigh the risks. In conclusion, the de-dollarization trend is a significant development in the global financial system, as countries seek to reduce their reliance on the dollar and diversify their foreign exchange reserves. While the shift away from the dollar is not without risks, it is driven by several factors, including the increasing use of digital currencies, the growing influence of China and other emerging economies, and the erosion of trust in the stability of the U.S. financial system. The long-term impact of this trend on the global financial system remains to be seen, but it is clear that the role of the dollar is being challenged as never before. Thanks for watching. If you found this video helpful, please consider subscribing for more content. Take care.